Financial Analysis by Stephanie Beckman at Aspen University. Objectives. The first objective of this presentation is to determine why balance sheets are important to healthcare organization finance and what area of the balance sheet would be considered the most critical. The second objective of this presentation is to determine which organizational costs the nursing administration has little control over and why, and which costs would be most important when expanding services and considering quality improvement measures. The third objective of this presentation is to compare and contrast for-profit and not-for-profit corporate structures based on the information available from a balance sheet and an income statement. The fourth objective of this presentation is to determine what types of assets, goodwill, and patents are, and to provide detailed examples and explanations. The fifth objective in this presentation is to compare and contrast assets, which are essential economic lifeblood of a healthcare organization's stability, and to provide detailed examples and explanations. The first section of this presentation will determine why balance sheets are important to healthcare organization finance and what area of the balance sheet would be considered most critical. A balance sheet provides a snapshot of the healthcare entity and is dated for 1 day period at a time. The balance sheet includes the assets, liabilities, and equities of the organization. Balance sheets prove a significant importance to healthcare organization finance in a number of ways. For example, balance sheet accounts are likely to have a notable impact on reported net income for the year. Additionally, in regards to larger retailers or manufacturers, there are a number of transactions each year that cause constant fluctuation in the inventory available for the organization, creating a need for a balance sheet inventory account. These fluctuations throughout the year are caused by purchases which are made, which result in an increase in inventory, and sales and resource utilization, which result in the decrease in inventory. Perhaps one of the most important areas of balance sheets is the operating activities. Operating activities are most certainly the most important part of a cash flow analysis and work to determine cash inflows and outflows for the organization. This includes costs and expenses, financing and investing, etc. This balance sheet displays changes in costs and expenses for the organization and allows budgeting personnel to make appropriate accommodations for the organization to ensure a steady income and responsible outflow of cash. This portion of the presentation will determine which organizational costs the nursing administration has very little control over and why, and which costs would be most important when expanding services and considering quality improvement measures. When comparing organizational costs, there are some costs that nursing administrative personnel have very little control over. One example of this type of cost is a fixed cost. Fixed costs are costs that never fluctuate and never change with levels of services. One example of a fixed cost would be if you are dealing with a facility which holds 200 beds. Building costs such as depreciation will continuously remain the exact same, regardless of whether there is only a handful of patients residing in the facility or whether every single bed in the whole building is full. These types of costs, as insinuated, are completely fixed, and nursing administrators have absolutely no control over this type of cost. There are certain costs which would be considered more important than others when expanding your services and considering quality improvement measures. An example of one of these important costs would be activity-based costing. Activity-based costing presents the idea that in an expansion of the organization, purchasing of new equipment, and the offering of new services, that it should be considered whether the revenue that will be brought in as a result of these new services will at the very least meet but preferably exceed the cost of the machines, equipment, staff, resources, and maintenance that will be required as a result of the new expansion. This is an important cost analysis to make when considering expansion because it would be unfair to both patients and staff members to expand the organization at the expense of being financially able to continue to provide quality care. This brings about a classic case of quantity versus quality. While in some cases it may make perfect financial sense to expand, and some organizations may be in a position to do it in a cost-effective way, it is important to ensure this priority to initiate an expansion beyond the means of the organization and ultimately sacrificing the quality of care which would normally be provided in a more narrow scope of practice. This section of the presentation will compare and contrast for-profit and not-for-profit structures based on the information available from a balance sheet and an income statement. There are some distinct differences as well as some stark similarities between the corporate structures of for-profit and not-for-profit organizations based on the information available from a balance sheet and an income statement. We will discuss these differences and similarities by utilizing this diagram. The primary goal of a for-profit organization is to maximize profits and then pass these profits on to the company's owners and shareholders. For-profit organizations are also held responsible for paying taxes, which are based on their net income. For-profit organizations will also assemble an income statement each quarter in order to assess the organization's financial performance 4 times a year. On the other hand, nonprofit organizations' primary goal is to adequately meet the needs of society. This is a reasonable goal for a nonprofit organization because these types of organizations do not have owners. Instead of prioritizing the maximization of profits, nonprofit organizations simply just want to ensure that the generated revenue ends up being greater than the company's cost at the end of the day. In a nonprofit organization, income is never distributed to any owners or shareholders, but is instead expected to be recycled right back into the nonprofit organization's public benefit mission and activities. In regards to taxes, nonprofit organizations are exempt from paying income taxes, but are still held responsible for state and property taxes. Also, instead of producing income statements, nonprofit organizations will usually assemble a compilation of activities, which includes information regarding all revenues, expenses, and assets. Because nonprofit organizations do not operate hand in hand with their owners, they generally produce a document called a statement of financial position, which usually displays the organization's assets and liabilities and replaces what would be an income statement in a for-profit organization. From the above descriptions of each of these structures, it can be determined that despite their differences, there are some similarities. For example, in order for each organization to continue to function, both require that their income at least meets their expenses and preferably continues to exceed the expenses. Additionally, each are held responsible for paying taxes to a certain degree. And finally, both types of organizations depend heavily on quarterly balance sheets for information regarding equity. This section of the presentation will determine what types of assets goodwill and patents are and will provide detailed examples and explanations. Goodwill is described as being the excess amount paid for the net assets of the purchased entity that exceeds market value when an entity purchases another organization. A patent is described as being a right which is granted by the federal government to an inventor that allows the inventor to exclude others from making, selling, or utilizing the invention for a period of time. Both goodwill and patents are both considered to be what are called intangible assets. One example of intangible assets is in the realm of pharmaceuticals. Intangible assets present the opportunity to utilize discounted cash flows in order to value the drug patents of pharmaceutical companies. Additionally, pharmaceutical companies present an intangible asset-rich bunch of companies and high-value blockbuster drugs. Pharmaceutical companies generally have very similar product life cycles, financial structure, and even operating expenses for the valuation of intangible assets. Finally, large pharmaceutical companies often voluntarily disclose drug product sales revenues, which ultimately enables the calculation of future cash flows. This section of the presentation will compare and contrast assets, which are essential economic lifeblood of a healthcare organization's stability, and will provide detailed examples and explanations. One example of an asset that is absolutely essential for the stability of an organization is cash. Cash is considered the primary lifeblood of an organization and represents the revenue which has been earned from services that were provided. Another example of an essential asset is inventories of the facility. Inventories include all of the items which are owned by the organization, including supplies, food, drink, medications, etc. A third example of an essential asset is property and equipment, which are owned by the organization, including facilities, buildings, land, equipment, and machines. Every single one of these assets work together to contribute to the total worth of the organization and the overall stability of the functionality of the facility. Conclusion. In conclusion, the first objective of this presentation was to determine why balance sheets are important to healthcare organization finance and what area of the balance sheet would be considered most critical. The second objective of this presentation was to determine which organizational costs the nursing administration has little control over and why, and which costs would be most important when expanding services and considering quality improvement measures. The third objective of this presentation was to compare and contrast for-profit and not-for-profit corporate structures based on the information available from a balance sheet and an income statement. The fourth objective of this presentation was to determine what types of assets goodwill and patents are, and to provide detailed explanations and examples. The fifth objective in this presentation was to compare and contrast assets, which are essential economic lifebloods of a healthcare organization's stability, and to provide detailed examples and explanations. References. These are the references which were utilized for the completion of this project. Thank you for your time.